Alright, cool. Hmm. Wow, that is crazy. Snap, hello. Alright, cool. Let's look at this. Man, the power of pre-market is really crazy. So look at this. This thing is at like what 34.65 pre-market. It went up to like 35.10, 35.14. That's a lot of money. Look what we got with Tesla, man. Tesla is just be tripping. Look at this. Man, this company is trash, low key. Uh, but you see, we got Google up, we got Amazon up. Look at this, all green. Facebook up, Spy up, $2, almost $3. It's crazy. Uh, let's look at Tesla again. I wish Spy would have went to 420 yesterday. We would have made some money with him. Sometimes you just be a day off on your contracts, man. You know what I'm saying? If I had one extra day on my spot contract, could have made some good money with it going to 420. But it is what it is. It be like that. Tesla needs to go ahead, bounce back, stop playing. Let's look at something though. Yeah, we just gonna let's look at Tesla. Boxer is just another site that can give you more insight on the company. So these people say it's a 40% buy. Hmm. They saying these are the reasons they think it's a buy. Hmm. But these say sell, right? Interesting. Huh. Let's say it's a moderate buy number. Hmm. Yeah, it's wishy washy. They don't know what they want to do with it really. Let's look at Amazon on this saying. Look at that. They all say buy. You see the difference? Now let's look at the chart. See how wishy-washy it is. But all this did, you can see it went up. It's Amazon. It went right up. Boom. Google been pretty much up and down, but it has a more consistent pattern. Only thing I don't like about Tesla is it's not consistent. Uh, it doesn't have like a consistent pattern, man. Sometimes it be feeling real iffy. Let's look at this. Yeah, I don't know about that, buddy. 2 week range is showing you the high and the low the last 52 weeks. Performance over 5 days has been down. 1 month ago it's up in 1 month, but look, in 3 months it's been down. In a year it's been down. Year to date, year total. So it's like it's just real iffy. They say, oh, average target price 66.82.97. 37 people, analysts. Hmm. Look at this. 13 say buy. 14 you say just hold it. And 7 you say sell. They don't know. That's really what it's all it's saying is they really don't know. Stock price targets is showing you what they think it could go up to. 1,200. The median is 733. Low is 67. It's the average. Current price 694. So it got growth, but I mean, this is cool. When you want to look long term and things like that, say cool. Yo, it got some growth into it. It's more of a long term play. But look, just like that, look at it. And this is the same thing it's reflecting on the chart. It don't be knowing what's going on, man. You just be lost in the sauce sometimes. You look the last 6 months, it was up. Had a good little run early when it was consistently going up. People rode this wave. They was good. If you rode the wave right here, you know what I'm saying, from 400 to 900, you good to go. It's over a few months. Over what? From November till what? January. It went up that whole time. Had a nice little run, but look at what it says then. It's been going down, went down. Now it's trading. It's pretty much trading even, which it can either go up soon or it's gonna go back down. You know, 70% of the time stocks go up. So if you had a long term portfolio, cool. But here's the thing, right? That's why I always recommend, learning long term first. Long term is what's gonna get you to understand that. So when you come here to understand options, you will know what's going on. All right, you can play both sides of the fence. You can be long Tesla and run options on it at the same time. You can do both. You can have a long term amount of Amazon stock that you holding for the long term and play options on it because now you understand how this stock move. At least you have an understanding of it. So, but yeah, it had peaked at 900. It went down. Stocks either move sideways. It's like a stage one. They go up. It should be a stage two breakout. This is what you want to catch. The stage one going into a stage two breakout because you want to get in right here. Look at that. If we looking at this chart, we say, okay, this green line crossed the red. Okay, that's a good sign. It's a sign that the stock is looking to go up. Wait for confirmation. We don't know. We not sure yet. It's still on the line. It's teetering the line. It's not. We want to make sure it's cleared the line. When you want confirmation twice, we say okay, boom. This the first green marker that cleared. This the second one that cleared. We say okay. Now it's looking like a buy. We get in and wrong right here. Let's say 492. And look at that. It just go up. Boom, 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 boom. Depending on how long your contract is. I mean, you probably wouldn't have if you're doing options, you wouldn't have a contract for too long. You might, quite a little $50, $50 run up. And that's a lot of money. If you $50 over your strike price, that's potentially $5,000. You know what I'm saying, per contract. Right, and you ride it up. If you're doing long-term investing, you get in right here. That's a good buy. You seeing it's going up. People seeing it go to 900. They see it go down. You might have sold off some right here. Just decrease your position if you got a long-term position in it. And when they go down, that's the thing, man. People who actually trade stocks on like a consistent basis and they got a long-term portfolio or option portfolio, when the stock go down, it's not necessarily a bad thing for them. They can play both sides of the fence. That's what make you more dangerous, right? And that's really the best part. So when the stock go down, they say, okay, 900. RSI say it's overbought. You see it's red. RSI basically telling you like, man, the stock is going over what it's usually valued. What we think it's gonna be valued. People just overbought the volume. So okay, you sell off some, boom, and go back down. Going from 900 right here to back to 570. Guess what? Some people probably they got some more. They say, "Ooh, the stock don't went down. They can buy some more for cheap," and they looking to ride the wave back up again. Oh, all right, my bad, y'all. His headset had died. But that's really the basic principle. Look at the stock, right? You say, what's a cheap stock that you can get in if you ain't got a whole bunch of necessarily money to be putting into it, right? You say, okay, cool. Let's look at Microsoft. Same 6 month chart. Microsoft been, pretty good. I mean, for the most part, going up the last 6 months. Thing here though is we had a new high, right? When you got a new high, you gotta start the confirmation prices all over again. Process, because usually when you have a high, it's usually time to put in puts because that means people selling off, right? So when they looking at this and they holding this stock and they see it's a high, a lot of people sell. They're like, okay, I'm saying they kind of lock in their profits at that point. They're not even trying to do nothing else. So they sell. So you have a pushback. Look at this. You got this red. It was at 263. As soon as it hit the high, guess what happened? People sold off. People was like, okay, cool. Let's lock in profits. It sold. It dropped $10. Just like that. It's looking to see what's gonna happen again. But look, just check it out. What happens every time it's a high? This is when people getting in, right? That's a misconception, right? I see it all the time. People see this right here, this high. They not looking at the RSI. They not understanding that this is an indicator that the stock is overbought or is overvalued. You looking at it. Look at the MACD. Look at the MACD is showing you, right? Check this out. You got this stock going. It's high. You see, it's higher. Green means it's going up. Higher highs, higher highs, higher highs. Look how it's starting to peak off. Higher highs. It's going down, right? Look at this. It's going down. It's showing you. It's literally showing you before it happened. It's showing you that it's becoming overbought and oversold. It's overvalued right now. They showing you indicators that it's gonna go down. Lower, 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 lower greens, lower greens, lower greens. Boom. It goes red. If these people not looking at this stuff, right? They buying. They looking. They see it's high. They're like, oh, it's time for me to get in. They thinking that's a good entry point. It goes down. Boom. They lose money. Now they discourage and play the market. Now they feel like the market is volatile. It's not fair. Sexual. The case may be. Whole time they really just ignored the signs. They ignored the signs. And that's not to say this is a guarantee every time, but it's definitely, like I said, it's an indicator, and it's right a lot of time. It's showing you, it's already showing you what's up. You already should know this. Look at all these stocks. They had a high. They literally all went down. They was at a high. The market moved based off of fear and greed. They had a high. People were fearful. They know it's gonna people gonna sell. Well, so what that mean? They mean okay. They saying I gotta sell too. They know it's gonna be people who gonna buy because they don't know no better. So it's a win-win for people. For the people who that's how you lose your money. That's how people gain money. You gain money in the stock market because other people either they was fearful that the stock wasn't gonna go up, or they want to lock in their profits. Both sides of the coin. Both people want both the seller and the buyer. I think the other person is dumb. This person who bought it at the high, they thinking the person who sold it is dumb because it's going up. That's what they be believing. They be thinking like this person who sold the stock is dumb because the stock going up. They looking at it like, yeah, this is because think about it this way. They can't see this yet. This is the only reason we seen it is because it already happened. But they looking at it like, yeah, y'all are dumb. The stock going up. The person who sold it, like the person who bought it, dumb because they thinking it's going down. It's at a high. They like, yeah, it's about to go down. And so that's the battle right there. That's what you waking up to every day. And yep, boom, went down right there. Look at this. We got another high that happened. This happened today. This hit a high on the stock today. What happened? Boom, went down. It was at 35.14. Instantly dropped. Another $10. Look, $10 here, $10 there. Dropped again. He dropped all the way back to 34.97. Now it's reconciling. We seeing what's going to end up happening. It's at 34.93, but it was at 35.14. There's people who woke up this morning. I got Amazon stock. Some of them seen the high and they got out immediately. Like I told y'all yesterday, right? Where was we at yesterday with this stock? Let's go back and look. Yesterday, we peaked at what? 34.85. I told y'all, I said, yesterday we had 2 days left. It expired 30th. I believe, I want to say yesterday, we started the day, we was maybe at 4,000. So just for me holding it one more day, we up 3,400 more. Off of just one contract too. I told y'all, mind you, I usually trade five. I said my goal was 50,000 this week. Probably not gonna reach that just because of how I set everything up, but I want to chill week this week just to lock in as a profit. So, but just times it's about five and measure how much that'll been. And it all started from this process, right? So it's the same concept. Now we gonna see what happened throughout the day. We having a sharp drop. But like I said, we got in so early. Look, this dropping people might be some people like, man, some people bought in right here. Some people bought this today. Some people literally this morning got in. They, oh yeah, Amazon about to go up. But we already know better. Look, the same thing over here. SPY for 2072 is a high. Look what happened. It instantly drops. Look, 1, 2, 1, 2. 1, 2. It's high. 1, 2. Green market after that. 1, 2. Green. We didn't even get to one right here. But look, 1, 2. Green. It's just little patterns like this, little stuff like this that you gotta start paying attention to. You gotta actually look at the charts, pay attention to. You start to see patterns. You will know what's up. Like check this out. I can afford to wait this out throughout the day because I'm already up. I'm already up 7,000. I could have tried to take profits right here, but what did we see yesterday? I just showed you. We can just say the high yesterday was 34.90. That's another what almost $25 that it went up. What happened if I hold this till tomorrow? Do we go to 35, 50? I don't know. We gonna see throughout the day what happened with the stock. But that's the potential. Can I come here and look and say, yo, I want to stay above 7,000? Long as we stay above 7,000, I can let this chart, this stock, do what it want to do, play how I want to play. But that's just something you gotta have. That's when it comes down to your game plan. What's your plan for the stock? What's your game plan with it? But let's go here. Go back to Microsoft. This right here is Microsoft. It's at 254. We know the stock been going up. We see it did. These would be the best time to buy. Be looking. But let's look at the options for this stock. Okay, you probably wouldn't want to do it, but let's just say if you did want to do it one day. So anytime looking at these ask prices, you got your ask price. As you can see, the closer to in the money are the more expensive, right? So it's at 25.54. If you're trying to get 25.55, it's $1.11. Anytime you look at the ask price, you got times about 100. Let's see, do we got a calculator on this? We just do it on this just for make it easier for everybody to visually see. Boom. Okay, cool, simple. This is what you would pay for the option contract, $111. That's it. You ain't got a lot of money to put into contracts right now. There's cheap stocks out there, but know this. You see how I got the net change? This is the amount they believe the range that stocks are moving in this time frame. So it's only one day. So they predicting that the market predicts that it can go, plus or minus almost $3.50. So what does that mean for you? I told y'all earlier, every dollar above your strike price can be $100. So, they basically saying with each contract you buy for $111, you could potentially make, $340 if it moves up that, $3.40 in the plus range. You also got puts. Maybe you looking at this, right? Check this out. Like we just said, we know it's a high. Now let's just say we see this, right? We say, man, let's get some puts. Put mean you believe the stock is gonna go down. So let's say I do that and I see it's going down the red and I say, okay, I can get some puts on this. You do see this going up, you like, man, it's about to reach a new high. I can get some puts. Boom. Check it out. It go from 2063.19. It go down pretty much $10. Like I told y'all, each dollar it go past your strike price. So let's say you had to put for 63 or something like that, right? And you go $10 past that now. That's $1,000 per contract. Mind you, obviously now uh, these prices are inflated because it's already recharge my headset. But yeah. So obviously the premiums are up. So whenever a stock is going in a certain direction, the premiums are gonna be up. You see how it was just a higher price. It must have went down some more. You get what I'm saying? When is just $1.11 for 255 strike price? It was at 254, but now that it went down, it goes down. You see, these don't stay the same. They change based off of what the stock prices actually is. That's how people make money, right? So if you was a got in, you see how this is fluctuating in price, 288, because the stock just went up a little bit, right? It's at back to 194. That's what I mean, right? When some people ask me, they say, you know what? They want to know what exactly I'm getting into, so they can just try to copy the trade. And I tell them, I'm like, listen, just because I tell you the trade I'm in, that don't mean you're gonna get the same profit I'm gonna get. We can have the same contract and everything. I could be in profit, and you could not be in profit, just based off of the fact that of the time you got in, right? If I get in and do the trade, and then even if I go back and immediately tell you the time frame between me telling you and you going and executing could be the total difference between you being profitable and not being profitable, and me being profitable and you not being profitable, even though we got the same contract on the same stock. You get what I'm saying? You see how it was just $1.96. I could have bought mine $1.96, and you come in here and you paying $2.06. Now our profit margins are different. I'm gonna be more profitable than you just based off the fact that I got in earlier than you, and my actual contract was cheaper than yours. It's the same thing with this, right? Somebody could have came in and said, "Yeah, I know it's a high and it's going down right now, but I think the stock can go up." They could have came in and bought that contract earlier for that $1.11. They thinking that's a good price. They say, "Oh yeah, $111. I can afford that to get some stocks. If this stock been going, they look at the chart. They say this stock been going up. Somebody tell them about it or something like that. They say it's going up. I'm good. I'll give me a couple contracts." Whole time. This is just 5 minutes later. The stock 20 cents cheaper. Check that out. It's 20. It's really that. It's really how that works. Look, $1.88 now. Listen, I'm paying $88 per contract, and you pay $111 per contract. That's the difference. And so that's why I'm trying to show y'all, man. You need to be able to do your own little due diligence. Tap in for yourself, 'cause that's what's gonna make you, you know what I'm saying, elite, be able to make some money for real. I know it's people that got little, Discord groups and stuff like that where they just give out signals and things like that, or you think it's similar to forex where you can just get a signal and go put in your signal and everything, which is gonna be everything. But yeah, man, I don't recommend that. That's how people lose. That's how people lose money in the market, and they don't be knowing. They don't be understanding this concept. They don't be understanding how the options even work. And that's why I say, yo, you need to understand long-term investing first. Because if you understood long-term investing, you would already understand it. That's why I already had a basis in long-term investing when I came to stocks. It wasn't really nothing too crazy to learn. It was just predicting at the shorter time frame, right? I already understood that, yo, based on where the stock going, implied volatility, stocks to go up and go down. Look at this. The red, lower lows. You see, lower lows. It went up a little bit. Okay, it didn't confirm it too much. It had a lower green. I'm like, okay, this is what you say it's going heading back down. Guess what it did? Head back down. This went up a little bit and then stay up. Now look at this. It's higher reds. It's probably going back down some more. We might reach 280. But it's still early in the game, guys, right? So it's 7 o'clock. We're teetering at our 7 bands. This is when you know what I'm saying, one of the most volatile times of the market, right? I made the most money really only trading midday because that at that point you can clearly kind of see what kind of trend the stock is having for the day. Really, you getting in early. If you was to try to do it early, like if you want to do it like this, cool. You might wouldn't be one of the people who sell right here, right? Because look how a lot of these stocks open. It opened up, boom, high. Let's go back to the. We ain't even got the. Look, check it out. When it opened up, it had the highest point I got for the day so far, 256. Look at this. Look how I opened up. Pre-market is at 2401. It opened up 2390. Boom. Because so right here, I mean, you'd have missed this little markup right here, but you'd have been good. Scalp this. Look, you see at the end of the day, you buy. Okay, it's some people do. It's a strategy in itself, right? Some people they look at the chart. They say, okay, it's been going up the last 6 months, like we just looked at. They say, cool. They buy in the day. They wait for the red. They could have bought this little right here. Got in 2358. Cool. They rolled this Apple Market 2390. Woke up, sold immediately. Took their profits. They good for the day. They gonna wait till the end of the day. They try to do it all over again. Like, let's look at the next. Let's look up 2 days from now. What had happened? You gotta go to the find day, find minute. Um, okay, this is Wednesday, Tuesday. Okay, cool. Look at Tuesday, right? 2289. They doing the same concept. I just told y'all. They're giving y'all strategies right now. On Tuesday, it was at 2308. They could have bought right here. They see, okay, coming to the end of the day, 2310, they buy. Wake up, 2317. Boom. Took profits right here. And it's opened up red. But they still took profits. Look at the Amazon. Bought in the day, 2458. Wake up. That's a $65 move. They buy and sell immediately. They see it's the high. Wake up. Boom. They selling. Look what happened. This is strategy people doing. That's why you see it like this. Because people call it, it's called scalping, man. They wake up, they get that high, and they sell off immediately. They don't even want to do this. It's possible that I could, I might have just been able to. We see what the pot is doing right now, right? As soon as it did this, as soon as this crossed back over, this is already a bad sign. Me, it's possible that I might just be a little greedy, trying to milk it a little too much. Like, check this out. What we talk about. And for those of you asking, what are these lines we're looking at? You want to go over here to studies, right? Studies, you got this first one is your 9-day simple moving average. I can even tell you what it is. All you gotta do is click on it. You say, cool, it's our 9-day. We change the color to green. Let's look at this, read this. The simple moving average is calculated by summing the closing prices of security. Mm, it's just showing you the average over a 9-day period. Say bullish breakouts are indicated every time the price crosses above the average. When the price falls below the average, a bearish breakout is recognized. Bullish means it's going up, bearish means it's going down. Boom. Just like that. I even give you illustrations, examples. Oh, ain't that convenient? They got education right on the platform. Let's get back and look at the chart. So that's what we got. We got the 9-day, right? Then we got the 180-day. That's the red. 180-day. The more time you get, the more bigger picture you can get. You can see a more accurate representation of how it's been moving on the average. So I got my 9-day, my 180-day, the red. So the red is what is on average traded over the 180 days. The green is the average of it over the last 9 days. So once it crosses the red, you're like, okay, it's going up because it's above the average. You get what I'm saying? Now it's moving below that. We at 34.81. And boom, this is when you should have been thinking, okay, maybe I need to get out. Yeah, MACD. We got the MACD right here, green line. Let's see what it say about the MACD. Calculates the difference between two price averages. When the MACD crosses above the signal line, an uptrend may be emerging. When it falls below a downtrend, it's likely to be identified. Hmm. It's another tool. MACD, I like the MACD because it gives you a visualization, right? You seeing it. Having some lower lows. Not a lot of green, but you can see it. For the studies you got. RSI. And if if y'all want to, you setting up your own platform. You can copy this down. Telling you the color. Purple normal. Red means it's overbought. Baby blue mean oversold. Hmm. Let's see. RSI is widely used as an overbought, oversold indicator. Hmm. So it's telling you. Now look at this. Check this out. Boom, we gotta stop pulling up already. What red mean? Overbought. That means the price is getting kind of high. People overbuying it. They boosting the stock up. When people buy a lot of the stock, guys, it's only a limited amount of stocks. Some people think it's like unlimited number of stocks. No, it's not. There's only a set amount of each stock per company. So when people overbuying, what that mean? That means there's less available. Guess what? That means the value of the stock goes up. You get that? Since there's less available stocks, then that means the price, the value of the stock gotta go up. Now look at this. This thing that went on the way to the baby blue, that means it's oversold. Look at this, and look what happened with the chart. This thing was just at 25.56 and went straight down. But guess what? It's oversold. That means people selling off more than they believe people probably should on average. It's just indicators. If you're doing long-term investing, this might be a good time to get in. When people overselling, because now stuff is cheaper, right? Listen, we just looking at the 2055. Check this out. It's at 42 cents. We started off talking about the stock. It was at $1.11. Now, if you want to get a contract for it to reach 255, is at 44. I mean, we know it's gonna be $44, but $44. That's even half. That's almost half of what we was. That might be half of what we about to pay. I think it was yeah. It was at 88. That's half of what we just talked about. Now check out the 255 put. This is like $1.90. You know, went up. The value of the contract went up $2. It's 100 shares per contract. That means the value of this contract, this put went up $20. Hmm. Per contract. So, mm, you would have got 10 of these. You up 2,000 just off this little move right here. It's a nice little piece of change. You know, but it's stocks like this all around. Stocks like this all around, guys. You just gotta start looking at stuff you use, man. Just because once you know how to come and look at the stuff yourself, it's cool. It's plenty of tools. I gave y'all sites, websites you can go and look at just to see what some analysts are saying about it. Just can reconfirm what you already know, but you can see the patterns, how things end up moving. The thing is, right? We might start adapting the strategy more. I could have came, so up here 350, and then took profits. Knew it was a high. I could have rolled this whole way back down to 34.72. Mind you, when the wave was down, right? Let's go back and look, cause it's gonna go back up probably soon. It's going back up now. Look at this, 34.85. We got it right here. Let's just do 70, what it just was, times 100. Could pay 7 bands. And got another contract at the 34.80. You know what I'm saying? The area done went up 3.5. I said that, almost $4. Past my strike price. Guess what? That's $400 profit. So I would have paid seven. It would have been worth $7,400 right now. Check this out. Now, what if it go all the way back up? Hmm. What if it shoot back up $30? How much do I get off that? If every dollar is worth $100 and it go up $30, another $3,000. But this time, that's how you compound it. I could have sold. I got one contract, so made $7,000. It was more than that. It would have been more than that up here. So I could have took a little small profit I secured, came back down here and bought two contracts. Ride the way back up. That's another $6,000. And that's just how quick you can make a lot of money. But you gotta understand what you're looking at first. And this is more, these contracts are more expensive, but it's the same concept down here with Microsoft. It's gonna go back up. That's what stocks do. They go up and down. They either go. There's only three ways they can go: up, down, and sideways. And they never do one forever. And that's why you want to learn long-term investing, so you value the stocks. If you value the stock, right, and you dig your charts, you look at the chart, you know when the pattern is trading at, you might not feel halfway about getting back into it. And the SPY is just a accumulation of all the tech stocks. So when tech is up, SPY gonna be up. SPY is also another one to get into, right? Let's look at SPY. We seen it reached 420 today. I see. You could pay $84 and you got a SPY contract. Let's just say you got 10. Pay 840, you got 10 contracts. And it go up, you know what I'm saying? It go up $1. You'd have been smooth. That's $1,000 you would have made. You do that a few times, you're gonna be good. That's how I started off my account. I started off my account trading little stuff like SPY. I was consistent with trading SPY. Go, I waited. I mean, this is like I said, same thing with the puts. It's crossing this line. It's not confirmation. It's the same concept when it cross here. You in the way to it. It's not even touching. So boom, boom. We would have got in around here. See, two confirmations of the red. Ain't touching. Maybe wrote this down $1. But if I got 10 puts and then go down $1, like I just told y'all, we just calculate $1,000. But guys, my headphone dying, so I'm gonna let it charge for a little bit. And like I said, I'm gonna get back to y'all a little later. Hope y'all enjoyed this. If you got any specific questions or specific stock you want to see analyzed, cool. Let me know. We can do that together. And yeah, we gonna see what this little wave do. Amazon, let this just ride out, let it do a thing. And yeah, so I'll talk to y'all later.